Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino. Happy Sunday. How is everyone doing? Hello, Ken. Good afternoon, Christoph. I think it's good evening your time. Hope is all is well. Yes, hope everyone is having a great day, has a great weekend, and has a fantastic trading week. Hello, hello. By the way, as Christoph just said, sector overview is very useful. Thanks for posting. If you haven't watched it yet, and I know some of you have, and thank you everyone who's already come and left a comment on it. Really, really appreciate it. Trying to get this useful information out to as many people as possible. Okay, and I think it's always good to review the sectors so you have an idea. And I also I'm starting to give more and more of my thoughts, what I'm looking for, what I'm watching for, things I could be watching for, short-term bounces in, etc. So give me some more feedback on that too if you haven't already. Good afternoon, Sashi. Good afternoon, George. How is everyone doing? And by the way, bunch of long-term subscribers are already here, but if you are new and like what this content does, then please do consider subscribing, hitting that like button, and ringing that bell. And again, longer term subscribers, please, please, please leave comments. It really helps get this information distributed through the algos. Oh, hello. We can look at Amazon. Hi, Abraham. So, interesting week coming up. Interesting week. We got a lot going on. Let me switch to my other camera. Tomorrow at 9, and everything I do is off Central Time. And when I move, which will hopefully be sometime soon, then it'll be off probably Eastern Time, even if I move west. So, but tomorrow we're still on Central Time because I'm in the suburbs of Chicago. ISM Manufacturing PMI 9, and that can potentially be market moving. So that's the first thing I'm really paying attention to. You have the global manufacturing PMI final coming out about 15 minutes beforehand, but this will be the biggie tomorrow. Tuesday is very quiet. Factory orders. We'll keep an eye on that to see if they're increasing or decreasing, but that's not going to be as market moving. Wednesday, you got some mortgage stuff coming out in the morning early. You got ADP's employment number. But ISM non-manufacturing PMI is going to be biggie at 9 Central. Then we have a lot of our crude stuff. And then we have the Fed. The interest rate decision is pretty much baked in. But as I said last time, it's all going to be based off the press conference. So keep your eyes out. Don't get blindsided. That's 1:30 Central, 2:30 Eastern. That's the bigger movement than this one for me. Thursday, jobless claims. And then Friday, we got non-farm payroll Friday. So that's going to be potentially because unless there's a shock number that comes out, it's because of where it sits right now. I mean, we're sitting here. Unemployment rate prior was 3.6, forecast 3.5. Unless this comes in like at 3.9, then that could get interesting. Oh, then look what we have again. Since it's the quiet period ends on Wednesday, guess what we have? We have more Fed speakers. Yay for us. Yay, yay, yay. It's been nice for this last couple weeks or a week and a half without Fed speakers. I don't know what they need to say so often, but we'll get to hear. A reminder in case you needed it. Friday, blood red day. FOMC, pretty much that 50 basis points, which would take it to the 75 basis points to 100 basis points. So right now we're at 25 to 50. You add 50 to that. That takes us 75 to 100. I don't think they do anything like that 75 basis point in this meeting because they've already telegraphed pretty much what they're going to do. We're still in negative gamma territory. And as a reminder, that does not mean just pressure to the downside. That means you can get amplified moves in both ways. Okay? To the upside and the downside. Earnings this week, there's not a ton of stuff. Like last week, we had a lot of mega caps and tech, which can really actually move a lot in the market because of their weighting in the S&P and the Nasdaq. You don't have that much. I'm going to be watching BP and Marathon on Tuesday before the open. glance at Pfizer. I want to see Starbucks, what there does if the consumer's slowing down and inflationary pressures with them. AMD is going to be interesting after the close, especially with where semiconductors sit. Don't give a crap about Moderna. CVS I'll look at. I generally watch CVS. So, I mean, I'll glance at Uber and Etsy, but nothing again after Wednesday. Shopify's already got beat to death. So I'll glance at that. Definitely got to see me some Crocs, though. ConocoPhillips, another potential energy play, and I gave my thoughts. I'm not going to reiterate my thoughts. If you want to hear that with energy, go look at the sector overview. Not much here on Thursday, and then Friday. I guess I'll have to peek at DraftKings, but I look at Under Armour too. But not. There's still earnings coming out, but nothing that's gonna like rock the market. It's all gonna be based off of the numbers I just went over that are released like Monday, Wednesday, and then the Fed speak. So let's see. Where do we sit? Hi, John. Welcome to the channel. Hello, Wavy. Tuning in live from Miami Beach. Well, that's got to be nice, Wavy. Bet you it's a little warmer than Canada, huh? It's all hell on FinTwit. All the bears are out in full force. That means we'll definitely get the bounce. By the way, I told you I'd do some numbers and run everything else. Hold on, I just shrunk the wrong window. We're at about just in the low 80% probability we will get a bounce this week, and I'm targeting Monday through Wednesday. Okay, so 80, it's right around 81, 82% probability. So keep that in mind. Here's the S&P. We are, cycles turning up. S&P closed pretty poorly, very low close, okay? You can see here, lowest close. I mean, since back in, of May of last year. So it's been a year since we've been at these levels. So, again, on a short-term basis, I do not have the price action on Friday. You can see here there's not a real bottoming pattern. I'm going to have to look to overnight to see if we do get any bottoming pattern. So you're going to have to tune in tomorrow. But we do have pretty substantial clear path moves here. So what does that mean? There were very little stopping points on Friday. So if this gets some momentum, it doesn't have to be tomorrow, but we start getting trading back into this area, especially about 4150, then we could see one of those rip your face off rallies. Please keep that in mind. Now, it's really got to, let me revise that number. 4150 will start getting interesting. 4182 is the 12.5% harmonic for this. And then you have your breakdown zone at about 4193. So you get real interesting above 4193 if we go back to that hour chart. See, look at this clear path move all the way back to the flag pattern. All right, now on the daily, unless this pushes a ton lower, we do have a potential double bottom. Do not front run this huge daily double bottom, though. That is a recipe for disaster, especially going against a daily rotation zone. So, but longer term, if we did get a massive rip your face off rally that essentially wiped out the decline from Friday and went through Thursday's high, we could easily see a return to much higher prices in pretty quick, I don't even know what word I was looking for. Pretty rapid succession. I don't know. Forget it. I'm not going to use that word. It's not coming to my brain today. It's still a Sunday. All right, so that's what we're looking at up here. The targets on that, by the way, it would be above 43.0350. You got 43.87, 44.26 area, then 44.70. I would focus on the first two targets first and foremost, because the last target is beyond the 62.5. And then if it did close at that last target above that 62.5, then we could actually see a return to the March. Some of these March highs. Am I expecting that? No, but we have to be prepared for anything in these markets. And again, we do have long-term sell rollover signals. By the way, the on a weekly basis, the S&P has triggered a sell signal. Does that mean we can't have a rally? No. Especially when these things trigger long-term sell signals, you generally get the rally. It's just the way it works. And then it rolls over. So please keep that in mind. All right, we already covered that one. The Bears are out in full force, which means I really start watching. I'm going to fade FinTwit. Hello, Options 22. And do you think Powell hit us with 75? No, I think he really shocked the markets. And based off that price action Friday, and based off of, I was watching for at least a 3 to 5 day rally off these lows. We only got 2 days before the slaughter move. So I don't think they'll do anything to disrupt the markets already more than they are. What chart or tool are you using to see the 80% probabilities of bounce Monday through Wednesday? It's some proprietary stuff that I can't release. But that's what, there's some things I just can't release out there. But it's not based off, it's based off of statistical work that's done. Just like I know, like when we close above the 62.5, the probabilities of hitting the 87.5 to 100, it's more statistical work and based off of overall market depth and how things have been traded. So that's why, it's not like I'm trying to keep stuff from you. It's just I cannot release some stuff because it's not mine to release because I'm not the sole developer of it. Nasdaq. Again, potential double bottom. Let me just get this out of the way. 13,542 is the peak, and then 13,9. What is that? 13,912, 25, 14,097, and 14,282. By the way, Nasdaq is still, and this triggered before, but it is still in sell mode, long-term sell mode. And even if that rallies, it takes us nowhere near a buy mode in the Nasdaq. So also just glancing at this weekly on the Nasdaq, see it could complete the double pattern and still not be above the weekly rotation zone. So yes, we can get bounces, but are they long-term buys? No, they're short-term plays still. You also have that same clear path on here with the Nasdaq. So if we really get a bottoming pattern and starting to get up back above some key levels, especially back above my first key area is about 13,045 and then 13,110 area. Then I'm starting to watch. Now, this is going against the rotation zone, this potential double. So you do have those potential reactions with the rotation zone and rotations back down. So that's why I wouldn't, unless we get a shorter term pattern, which we don't have yet, even on a 15-minute. There is no pattern here. So if you're saying, I'm just going to buy this, then you're gambling at this point. Because could we see continued lower price action Monday morning at least? Yes, we could. No, you can't. Options 22. What level would you be a buyer on the Nasdaq? Again, if you're looking for a short-term entry, you get a 4-hour close tomorrow above this high. On the Nasdaq, which would be 13,073, you get a 4-hour close. That's a very aggressive buy. That's your level. Do I have anything before that? Not at this point because we need more price action. It would just be saying, I'm going to try to buy this because there's another bottom down here, which, again, I don't have any odds on that. So that's just a pure gamble play. And why do I think we could still push lower? Because at least we could get a flush out move in Europe or in the morning. We still have a little more downward price action on the Dow to fully hit the double targets. All right. And that's not far to go. So it's not like I'm saying we could crash again Monday. Could we have a disaster on Monday? Sure. In this environment, you can always have a disaster. But I'll show you what else I'm keeping an eye on as we get to it. Just trying to make this as helpful as everything for as many people. By the way, the Dow also triggered a long-term sell signal. Long-term. So rallies at this point, you know, strong rallies are to be sold, but we wait for a rollover play. Just because we get a 1, 2, or 3 day rally, even a 1, 2, or 3 day rip your face off rally, you don't just become a magical seller. And again, with the Dow, you see clear, this is an advanced clear path move. There's a lot more stopping points in the Dow. So the Dow would be, if we start getting a rip your face off rally, the Dow would probably be the last one I'd be turning to. I'd be looking at the S&P and Nasdaq first. Then there's no great bottoming pattern even on the longer term basis here. So how would I be targeting stuff? This is where I just use my most recent harmonics on this push down, and I'd be targeting first off about the 37.5 retracement, which would take us back to the rotation zone of about 33,800. Then if we got above that, my next target would be 34,121. Hey, Amit. If you were looking for a buy signal in the Dow, it would be a close above on a 4-hour basis above 33,320, and let me give that for the S&P in case anybody wants it. The S&P would be a 4-hour close above 4187.25. And just because I tell you what it is, you take it for what it's worth. You're going against rotation zones, and that's, again, you have to manage it, and the stop has to be below this bar. Okay, so it has to be below Friday's lows on those buy signals. You can't try to crowd it because you can still get back and forth volatility. Hey, Sterling, welcome. That's not your normal little icon thingy there. So, but thanks for letting me know it was you. So, Mike, you know I'm going to ask TAs and the Qs, please. We'll get there. Okay, you're trading put spreads. That's fantastic. Everybody's got to manage their own trades. I'm just letting, and I don't have a buy signal before then. So could we have lower? Yes. And then could we bounce? Remember, 80, 81, 82% probability that we put in a low, especially weighted to the front end of this week, Monday, Tuesday, Wednesday. But that doesn't have to happen tomorrow. Could it go lower? Yes, it could. Russell, breaking down Russell. Oof. Russell, not good. You see here on the Russell, and this is the lowest close again since back in, November of 20. Russell's got some heavy lifting to do if it wants to get its rally on. Russell's against the daily rotation zone, and major resistance right now is about 1928. So that's pretty key on the Russell. And above that, then Russell's really, it's not looking good. But then the next target above that would be 1959. No real great pattern here. And you can't trade this as a double bottom, by the way. DAX, return into the flat rotation zone, downward sloping right here. Let me see here. Let me clean up something here. I got too many levels right here. Let me clean up some of this. On my DAX, if it starts getting above about 14,170, then I'm targeting the 50, about 14,350 to about 14,315 to 14,350 is my next target. To the downside, if it rolls back over, I'm just going back down to about 13.8 for tomorrow. Crude is just in this big consolidation pattern. Crude still, long term still in bullish mode, but really flattening out. So I don't have any great short-term patterns just yet. Besides, if it pulls back to 102.70 area, I'll be watching to see if we get a bounce play. If we drop below there, there's nothing really. Then it's in consolidation until we get back below 100. On a move back up play, I need it to get back above this bar's high, which comes in at 105.68. 105.68 is a very aggressive 4-hour bounce percent B buy play off. And why is it aggressive? Because it's still in consolidation. Gold. Gold is, we got that little bounce into that rotation zone, but gold, I'm still now watching for the potential pullback if we get another sell-off to about 1854. If we keep getting poor inflation numbers, this has some heavy lifting to get through this. This is why still, again, around watching the trade around the core position. My next level I'm looking to unwind is not back till 1966, and the next buy level is 1853. Silver, technical damage done, so there's no more buy on here until 2215, and then a sell would be back at 2341. Again, that's trading around a long-term core position, and the next sell level is 2450 area. Notes, we do have the potential double. Okay, and we did not close below the 62.5 on a daily basis. They're not saying we have to bounce just yet, but this potential doubles out of the way, and I'm watching for, within the next week, a long-term bottom pattern on notes unfolding. We are very far off the weekly rotation zone still, and we have that potential double play. So that's what I'm watching for. Now, if we get the close below the 62.5, I'm just watching for a further pullback to retest the lows from the 22nd of April, and that would be about 118.18 to about 118.08, and that would keep the double still in play. It would just change the targets on it, and we'll review the targets if we get closer. Dollar index pulling back, key support 102.37. Keep in mind also, I'm starting to watch for a potential longer term top in the dollar again. Off the rotation zone, incredibly overbought, and cycles at a weekly high, but not rolling over yet. And it still is in very strong buy mode. So, but we could see a pretty hefty retracement. All right, let's see. I'm going back through the comments here. Hold on. Let me get to the spiders and the Qs, and then we'll get through some other comments. The spiders, next level down, if we continue to sell tomorrow morning, 409.14, then 403.26. On a rally, my first little area I'm watching is about 417.70 and then 424.12, at least at this point. Again, we don't have any great pattern, and you broke down below this pretty key support. So I'm just targeting some of these harmonics on the way back up. That's what I'm using on there. And then the Qs. Now, we might have a little more clarity tomorrow. The Qs, next lower levels are still 310.65 and 303.86 to the upside. To the upside in the Qs. Minor about 320, 320.15, and then I'd be watching the daily rotation zone about 324.90. And then next level up there would be 327.70 into the daily rotation zone. Let's see. Bob said in one of his podcasts last week that he bought something in the distillates because he thought gas would move more than oil. Gas jumped, but oil didn't. What was it that he saw? Well, look at the storage figures on gas, especially on the East Coast. I don't know what specifically he saw in the distillates, but if you look at the gas storage figures on the East Coast, they're horribly low. You could see a continued push, and we're going again into more summer driving season, and gas supplies are not where they need to be. So we could see another substantial push higher in gas futures. Keep that in mind. Yeah, it could go lower tomorrow. Again, I don't have a short-term bottoming pattern. It's just that longer term. And we're going to have to see how Europe opens, and we still favor. If you had me bet overnight, because of that still little downside on the Dow, I'd slightly favor the downside. Twitter bears are calling for a Black Monday style crash tomorrow. All right, that's off the table. If they're calling for it, it's not going to happen. What do I think on buying 2% positions? Well, that's a very general question. In what? With what? In what sectors? And what? There's stuff I'm going to be shopping for short term. Again, 2% is just a risk tool. So can I put a 2% position on for something that is a short term play that I might be in for 3 to 5 days? Yeah. And I listed what sectors in the sector overview I'd be most focused on. Does that mean it's a 2% long-term play? No. It's not something I'm putting on and walking away. It's something that I would put, the 2% is just a risk management tool. It's saying, okay, if I have a $100,000 portfolio, I'm risking 2%, so $2,000 on any one play, whether it be a day trade, whether it be a swing trade, or whether it be a position trade. There are very few position trades right now. Most things are swing trades or shorter than that. Oh, I forgot. VIX. This is interesting. Potential double top. So unless a VIX explodes higher tomorrow morning, we do have a potential double top. So if it even opens lower than Friday's close and starts trading down, nothing really comes into play until we get below 28. But if it gets below 28, we could easily see a return back to the 200 area. So 25, roughly 25, just in front of 25, 23.65, 22.19, 22.20. So you could see a reversal play on the VIX too. Trading becomes hard these days. I hope the casino back again. Trading is hard in these kind of markets. That's why if you don't have something, or if you're long-term only, best thing to do is sit on your hands and manage stops. And if you get stopped out of positions, then once you can find long-term good positions, and I can't find a ton of long-term great positions just yet. I could be wrong, but notice on Fed minutes we move lower, yet on Fed meetings typically move higher. That's, I'd have to research, but I think that sounds correct. Fed meeting, that's why, again, separate from the Fed meeting. It just happens to be on the same week. That's why I think we could bottom, and we have very high probabilities we put in a short-term bottom. And once that Fed meeting is out of the way on Wednesday afternoon, we could even see a bottom before that. On any short-term rally in Tesla, would there be aggressive buy in the 1 hour, 4 hour daily? Just curious. Tesla. Again, Tesla closed right at the 62.5, but not below it. On the 1 hour, there is an aggressive, super aggressive buy, and I don't, above the last 1 hour trading bar. So that would be 885. On the 4 hour, there is no aggressive buy yet. There's no aggressive buy on the 4 hour and nothing on the daily yet. And it's going against the daily rotation zone. So the only thing is you have that 1 hour aggressive buy. Is there a longer term pattern? No, there's not yet. Keep in mind, if it does break down, you're back into a clear path move to the lows on the 28th. What would I be watching besides, if you want that 1 hour thing? I'd be watching if it can get above about 941. You have your major resistance before that about 926 to 928. And that's against the 4 hour rotation zone. Now remember, if you get a capitulation move or start getting a rip your face off rally in the Nasdaq, it'll probably take Tesla with it, unless, again, Elon's selling. And I know he said I'm done, but he's said that before, so who knows. I just manage it based off the short-term price action. Now, if we start getting close below that 62.5, or we start breaking below about 865 in the morning, then I'm targeting 830 area. Then I'm targeting back down to about 795. If we close below the 62.5 level, about 8, we'll just call it 869. Then I will be targeting longer term 755 to 700. I know we had a request for Amazon from Abraham. Amazon If we start rallying tomorrow, I'm going back to the harmonic cluster. That's why I haven't taken it off about 25.35 with the 1 hour rotation zone. And then above that, I'm going to about 2600. And above 2600, then I start targeting the harmonics from the gap play. And you can see the 37.5 harmonics right there too. So above that, then I'm targeting 2665. Then I'm targeting the 4 hour rotation zone and the 62.5% harmonic coming in at 2720. And yes, this is not supposed to be on the high. It's supposed to be on the closing price because it's gap fill harmonics. So that's my play. If we push lower, next little target is 2400 based off the harmonics. And then, since I already moved those, let me come back over here. And if it were to break down again, I got to use some of these short-term levels now. Below 2400, 2371, then 2310 are the next levels down lower. And it is trying to put in a cycle bottom now. And it's a super aggressive buy signal on a close above Friday's high. That would be a daily close. Why is that super, super aggressive? Because it's against the daily rotation zone and you have all this prior support in here becoming resistance. So you'd have to be very nimble with that kind of play. I completely agree on it. Please consider supporting the channel through Patreon or through Buy Me a Coffee or with a super chat if I've helped you out. Please do consider that. It's a lot of time to put this stuff together and do these videos. The Nas will try some pop tests to see if buyers come in. I believe they will. Once these pops stall, it will drop back to where you say a two-way price action until new further low. There you have Rich's take on it. LNG reserves in Europe are filled. No room for more. Thank you for sharing that, Abraham. By the way, your education is friggin' amazing. Apply the 62.5 marker on Amazon move that started the climb to the very top, came 2450, played the same day, expiring Friday. When it bounced, well, thank you for that feedback options. I try to provide a lot of very useful information for people. And this stuff's been tested out for so many years. It does work. Else I wouldn't be sharing it. And I think everybody who's now been long term, you can ask Sterling who's in here. He does a lot of work with it, and I think he's seen the benefit of it. Nvidia sold of 50%. Time to get in for a small position. We can take a look at Nvidia. Again, can't give you a specific. I can give you if I see setups. Nvidia, you do have a potential double, it looks like. As long as you don't get a major push lower, that is completely valid and would pretty much be out of the way of the 4 hour rotation zone to above 201.28, 210.45, 215.03, 219.61. Let's see where that plays on the daily, and that takes us, I'd really focus on the second target here, going against the daily rotation zone, but you're stalling out at this harmonic cluster. Now, if you start breaking the low from the 27th, your next major area isn't down to about 173.58 to about 171.95. Also, one thing I want to point out with Nvidia, this was a major bottoming pattern that broke. So you have major overhead resistance. So this would be a very aggressive play, and longer term, watching for lower price action. This would be just a quick little short-term play and then another long-term roll over. And we closed below the 62.5 from this whole run up from the COVID lows to the highs in November. We're already below the 62.5. So longer term, I'm watching for at least a return to 144. But that could happen over a series of weeks, not in the next few days. Couldn't believe it. Put on the brakes at 62.5. I'm telling you, 62.5 is a very important level, and it works better than the fib level. That was tested out very strongly. Glance at MLS, please. Sell off Friday around major support area 62.50. Earnings on tap tomorrow. I'm looking for a nimble scalp reversal play. Huh. I haven't looked at this in a while, as you can see. By the way, that is technically a head and shoulders top. So it would be a very short-term play for me to the upside, if anything. You do have earnings, as you pointed out, tomorrow. So looking for anything on here that technically does qualify as a double, I would definitely use the conservative targets on there, and it would nearly be out of the way of the daily or the 4-hour rotation zone. So above 6684, you got 6923, 7043, 7162. You also have a very highly aggressive buy. So take that for what it's worth above 6370 on a 4-hour closing basis. So you'd have to wait for the first 4-hour bar tomorrow. But those are your plays to the upside. Longer term, if this does trigger this head and shoulders, it could get very ugly for Mosaic. And it's not, I mean, if this triggered tomorrow, those would be the levels, but essentially if it took a little longer, it would slide out, but I'd be really watching. This could easily get back to the 200-day at some point. And even the second target is right, look at the second target right here, right at this key area. So, you know, if you're going to be, it hasn't triggered yet. And this is the shoulder. It's a little sloppy, but this is the other shoulder, and it's a little lopsided, but it does fit into it, and it has not triggered. It needs a break below the neckline, and that would anchor where it will, targets will go, but then a close below it. I wouldn't do anything until I got a daily close below that. Is there a segregated measure of gamma between the indices, or is it only available in total market gamma? Thought it would be gamma would be different for stocks. Yeah, there's some other gamma tools out there. I just don't highlight them, and you can get it on some sector stuff too. I just don't have the time to go through all that on a regular basis. And it is different for the S&P, and I highlight the S&P because if the S&P is pretty much a negative gamma, then the Nasdaq's a negative gamma because of the same hedging stuff. And the Dow will pretty much be a negative gamma too. So I don't need to go through everything, but there are tools out there to start looking at sector gamma and everything else. Will be capitulation or short squeeze this week? Again, we don't have a capitulation move yet. Could we get one? Yes. Can you get a short squeeze without a capitulation move? Yes. By the way, there's not as much squeezable price action. It would just be a strong buyable rally where people and short-term players would be running in to try to capture because stuff is oversold. But there isn't a lot of short squeezable stuff on a broad market. There are some individual stocks that are short squeezable, but not, I wouldn't be calling any rally here a short squeeze this week based off what I've looked at this weekend. Economists are predicting a famine, food shortages. Well, I think there will be food shortages by the end of the year. Kathy came on TV, I think 1,000 points went down due to Kathy. Well, Kathy might get a bounce in some of her stuff this week before it rolls over again. Netflix, please, with Rip Your Face Off rally. Netflix, at this point, you see down to that next harmonic. And oops, and I didn't want that one. Hold on. I was trying to grab this one. And I got to anchor it. Netflix, you can see here, stalling out. I'd really be watching for something. Let me see, really short term. You do have, let's measure it. Yep, you do have a potential double bottom. At this point, I'm just going to put on the aggressive targets, and you'd be running off 214.21, 218.97, 223.73, and that's on a move above, preferably a close, but you can always do it with momentum, a move above 204.70, and that would take you into the 4-hour rotation zone. That's your little Netflix play. The upside, if Netflix breaks below the low from the 28th of 185.67, the next major support doesn't come in until about 166.63. But if we start putting in that bigger bottoming pattern, then you might be able to see a little short play. Again, Netflix very oversold, cycles hitting the bottom. So there are some potential plays. Keep in mind, look at this with this double. No, it's a little hard to see, but that takes you back to this prior significant level and resistance becoming support area. It's just above there. So this isn't something to get greedy on. This is something for a short-term pop play. And that would also take it back to the daily rotation zone. That's what I'm saying. We could get some nice pop plays. If we get above some key levels in the Nasdaq and S&P, could some of these stocks have a little more room to run? Yes, they could. But we are not there yet. Mike, on Amazon for the gap fill retracement, is the previous close the high on the gap open? On Amazon, it's the close before the gap to the most recent low. So if we made a new low tomorrow, you'd have to update this level to the most recent low. Now, for the gap play, when it really starts to focus on filling the gap, and look where this is. Look where the 62% harmonic is. It's right at the prior support becoming resistance area. So that's going to be a big level. Now, how else can you use these? How else do I use them on shorter term plays? I use these as for targets to raise stops. So let's say there was another shorter term play to get long on Amazon. Well, these harmonics I use before it gets to 62.5 are general levels to either take some profits off or to raise stops. If a stock moves towards the 50 or 62.5, on what time frame are you looking for a close above or below? It depends on your basis. Like on that Tesla move would be a daily. Okay, because I'm looking for the bigger position. If we start breaking below the 62.5 on a 15-minute and we're into that area that I talked about lower, then I would be positioning on a short-term basis for some downward price action. But because you could break down, but still not close back below that level on the daily. So the levels I listed out way lower on Tesla are on for a daily close, not a 15-minute close. Your rant on Arc Friday was like a parent catching their kid drinking underage. Thank you for the levels. I'm going in on Sark to get my money back from Kathy. Just time it right with short Arc. This is nothing. Again, here's short Arc. I'd be watching for some. If I was playing this personally, I would be watching for, and I do not have a position on in this. I would be watching at this point for it's way overbought. Cycles are at the top. We start getting a rally in the Nasdaq Monday, Tuesday, Wednesday. I'd be watching for this to roll over and come back to some key levels, and I wouldn't get back in it till I got at least a bottoming pattern, probably somewhere in the daily rotation zone. Amazon 2013 gap fill. Oh, geez, you're really 2013. Oh, are you just talking price? Okay, 2013. I thought you meant the year. I'm like, weird. It's a little. Let's see. Where's that 2013? Down here. Longer term, you could see it. I wouldn't use that as a target right now. We got a long way to go before we can get there. We have a long way to go and a short time to get there. What movie is that from? Well, I wouldn't be using that target based off where we are at 24.85, and that's not a huge gap. So yes, it could get there, but that's not a target I'd be using anytime soon. Apple, I guess you want Apple. It's interesting because you do have that potential double on there with Apple. It's an ugly pattern though, and that would actually take it back above the 200. Shorter term than that, you have a hyper aggressive buy on a 1 hour close above 159.22. Other than that, you got 1 hour hitting oversold. You got 4 hour not yet oversold in cycles at the top. And you got daily trying to turn up. Your longer term play would be essentially above this 50-day EMA, which would give you the double triggers, which then I'd be focused on 170.64 to 172.86. Those would be the first major targets I'd be focusing on. If Apple breaks below 155, we still have got the 87.5, and statistically it still does favor that. That would wipe out that potential double. So that's that target. My next target lower is 153.74. Education you get here is priceless. What I've noticed is I trade less and make much more. Well, that's the point of trading. You don't want to trade more and make less. You want to trade less and make more, and you want to wait for the high probability setups. If I only have one tool to trade with, it would be a 62.5 for tracement. You could make a good living on gap fills and trend bounces and reversals. It's incredibly predictive. Agreed. Can we check car and rig? Yep. That was off there. I want to see. You got an aggressive buy above Friday's high on a closing basis. Above Friday's high on a closing basis only, you have an aggressive high. I mean, aggressive buy, aggressive high. And that's also the 37.5 harmonic. Then my first target, we've talked about enough, would be this 62.5, about 300, 301.14. And then you get a close above there. Then I target the 318.72 to about 327.80. Now, if you break below Thursday's low, I don't have anything to the short side. Key line in the sand would be down here. Actually, you could even go with this gap open. You get below 239.42, gap fill, but then you're in a clear path move all the way down here. So I don't have anything for the short side, and you have an aggressive. Well, it's not that aggressive along, but you need that close above 282.80. Rig. It still can qualify. Yep. Above 405, you got 476, 437, 447. It's trading right at the 200 on the 4 hour and just above the 200. So even if this came down tomorrow, you'd still have a potential double bottom here, 364. I would not be bullish on a close below about 364. What's this low? Below 362 would be not good, at least in the short term. You'd still potentially have a double in play, but that's the only play I have to the upside. Is that, and by the way, it's also would be the same trigger. If it triggered tomorrow, would be a percent beat buy. You are welcome. Yeah, everybody's fine here, Amit. You are welcome. Have a great night too. Seeing some chatter that Nvidia may be the modern day Cisco. Your thoughts and maybe a rant about constantly buying the dip on stocks that are too cheap. Stocks that I'm not in the mood for a rant. I'm ranted out still from Friday. Stocks that are too cheap can always get cheaper. And why Cisco could be Nvidia? Look, remember Cisco. Let me take off a level here. Remember Cisco. Just get to this monthly chart. People are saying it was too cheap all the way down. Well, it got really far down, and it still hasn't recovered. Okay, so here's the dot-com bubble, and things that are too cheap can always get cheaper, especially in this environment, especially at still elevated PEs. So, can Nvidia be the next Cisco and repeat something like that? You tell me. Vertical up, vertical down. This is why anything is still a short-term play. Price to earnings ratio is still 51.45. And with tightening money policy, slowdown in semiconductors for a myriad of reasons, 51.45. So could you see it cheaper? It's still closed below the 62.5. Yeah. Back to the first chart. Just focus on this. Okay? This was expensive up here. And it kept getting cheaper. Way cheaper than people thought. All right? So could you see a repeat of that? Yeah, you could see it with a lot of these still high flyer stocks. This is why anything on Nvidia would be a short-term play only. Like this is a short-term play. You have a potential double that hasn't even triggered yet. Is it a long-term play? No, it's a short-term bounce play and then long-term rollover play. That's why you got to keep things in perspective. That's why we have targets too. This is not buy Nvidia and walk away for a year, because you could see Nvidia back like at 140 and then you could see it back at 117. So you got to, this is why I don't trade just based off of a lot of fundamentals. But when I see this kind of environment with still sky high PEs going into a fiscal tightening environment where money's getting more expensive, not cheaper, I don't want to be long-term owning something with this kind of PEs. They can be short-term trades, they're not long-term owns. And too cheap can always get cheaper. Mike, for your long-term sell signal on the Dow, are these typically walk-away type stops for you? Are these what that just means is I'm not going to be a long-term buyer of things. It means I'm a short-term trader of things. Now, once we get a long-term buy signal, whether it be in the S&P, the Dow, or everything else, then I can play stuff for long-term buy and holds. And not just like playing the diamonds, the spiders, or the Qs for long-term buys or holds. I'm also saying I'm more interested in finding stocks that are at great now fundamental levels, are putting in long-term reversal patterns, and that's something I just want to buy, stuff away in a portfolio, and raise stops. And hopefully catch a long-term trend. And then that makes trading and investing really easy. You are welcome, Wist661. I can see a big short-term bounce, as you said, double bottoms on heavyweights, Apple, Nvidia, and Netflix and SPY. Yeah, we could. And I'm waiting for it. I need them to trigger. Okay? How do I block these? Oh, I hate this crap when they get this stuff in there. What is PE ratio that is reasonable to buy? Again, it's based off market conditions, but I'm looking for a lot of these longer-term tech stocks to at least return to 16 PEs or below, and S&P stocks to possibly return to the 12, 13 PEs at least. Now, is that specific for every stock? No, because it's generalized. And are there still going to be some growth companies out there that warrant higher in PEs? Yes, but there's been stuff that's pumped up way too much. So don't just go, oh, Mike said something hits a 16 PE, I just go buy it. No, I get interested. And could it get to 16 and a half and I get interested? Sure. Could it get to 17 with a great bottoming pattern and overall stronger market conditions? Sure. Could it get to 14? Yes. But my ears really perk up once we start getting the Nasdaq back to 16 and the S&P lower than that on a broad basis. And then I don't just randomly buy stuff. I need patterns. I need longer term buy signals to kick in. Is there anything you can buy and walk away? Nothing. Just some commodity stuff still, but even that, because commodities will still get sold with things slowing down. Long term, if you're positioned right, commodities are more of a walk-away stuff. But in this environment, it's still more tactile trading. It's why even gold, silver, crude's going to turn into trading around the core position unless we really get a move on. Some agriculture could be still in a longer term walk away, at least through the summer. But there's not a lot that I'd walk away from right now. That's the nature of these markets. SEDG earnings. I don't need SE. That's nothing I follow. Solar Edge. Now, I'd be real careful with this one, even on a bounce, because you're getting close below 62.5. I'd be watching for lower price action. You're below the 200. You're against the daily rotation zone. You close below the 62.5. So any bounce play for me would be a longer term sell back down into this major support area at least. Not interested in being a buyer of anything on that one. Like if you were to go short the Dow. Again, it's not a walk-away play, though, because as I said, the Dow triggered a sell signal on the one long-term system. The other systems have already been in place for a few weeks, but I'm now expecting that little rally and then establish more of a long-term play. Okay? I wouldn't be rushing out to put on a huge short position in the Dow tomorrow. I'd be watching for a strategic bounce play in that. You're welcome, Jake. You're welcome, Sterling. Everyone follow us Please follow us on Twitter, path_trading. Sterling's doing a lot of great stuff out there. BTC will repeat the 2018 crash. I can easily see BTC back to 20K. Does your longer term system also work on individual stocks? Yes, it does. I use it all the time on it. And I'm working on it works great. I use it all the time. I use slightly different parameters. Okay. I use slightly different parameters. This is my sector one. Okay. But you got a buy signal here. You actually didn't get a sell in Nvidia until you got a sell back at the beginning of January. But I'd have to put up my stock one. Yes, it does. It can keep me in things a very long time. Sorry, I'm on a daily. Oops, that was the daily. All right, I'll give you an example. Apple kicked in a buy signal on 6th of April of 20. Still hasn't issued a sell signal. Nvidia kicked in a buy signal on 23rd of March. Kicked in a sell signal, looks like on the 11th of April. You want another I don't know what to use. Microsoft kicked in a buy signal on the 23rd of March. And kicked in a sell signal back on the 11th of April. Now, can you get out before it kicks in the long-term sell signal? Sure, because there's topping stuff, but this is, and before that, I mean, look, you were in Microsoft. That wasn't even a sell signal. You were in Microsoft. Last buy signal in that was in September of 15, and did not issue the sell signal in Microsoft until the COVID little spike down, which was quickly reversed. So this will keep you in stuff for a long time. All right. I'm just looking. Amazon didn't even trigger a COVID sell signal there. Amazon had the last buy signal in Amazon was back in 19 January of 19, and issued a sell signal on the January of this year, and still is in sell mode. So yes, it can be worked, and that's based off the second. I tweak it a little for stocks, but it's roughly the same. Angela, what is the purple line? The purple line is a exponential moving average I use. Well, I have two purple lines, and I haven't released the exact parameters on that. That's going to be a little paid for thing to help support the channel with all the rules surrounding it that I've used for years. I just like it because what I can do is you can call it any stock, and I can come up here, you know, is it a long-term buy or sell for me? And then I can start managing a position around that. I don't have to do a lot of work. I can literally, in 10 seconds or less, tell you if it's a long-term buy or sell. That's why I like having a system like that. And when it's in long-term sell, it doesn't mean I can't take things like short-term double bottoms. It means I don't want to really invest in this stock long-term until it triggers a long-term buy signal again. And then it can literally be something I could be in for years. I'll let everybody know. I'm in the process of recording it. Did you get enough feedback from everyone on the Discord in order to move forward with this live stream course on reversal patterns? Yes, I did. So, hello, I need SPY to bounce up to 425 or my calls are dead meat. By what time? I mean, what's your time frame on that one? Could you get to it this week? Yeah. I just don't know your time frame on your calls. If they expire Friday, it could be really close. If we get that rally, remember 81, 82% probabilities we do get a rally. But it's not just go buy tomorrow and close your eyes. The 520, but prefer next week, yeah, because you're going to be start eating some heavy theta. That's definitely, I think you could get there. You might have a little more selling pressure before you get there, but I definitely think you could get there. You're going to have to be nimble managing that position, and I would not get super greedy because you are going into a rotation zone. So that's nothing you go, it hits there and go, oh, this is going back to 450. No. You would have to really do some heavy lifting before that happens. In margin call until this Tuesday, praying for a rally. Again, please, everybody, please, this one thing I teach, and if you're new here, know where your stops are on positions before you get in it, and manage. You got to manage downside risk first. I'm sorry you're in a margin call, and that's never a fun thing to be in. Hopefully you will get a pop, but what's the learning lesson from this is to you got to manage risk first. It's why, and for newer people here, before I ever put on a trade, I know my entry price, I know my target price, and a target price doesn't have to be take full profits. A target price could be keep ratcheting up stops. And I definitely know my stop price. And as I've talked about before, I manage my risk, whether it's at 1%, 2%, whatever it is, I manage on the stop basis. So I adjust my share size depending on where my entry price is and my stop price. So I'm taking the same consistent risk per strategy, because you never know which ones are going to work. And if you monitor your stops and don't fudge them and don't, oh, it's going to turn around, it's going to turn around, you hopefully will never get in a position where you get margin calls long term. Can anything still happen? Yes, you could have some disastrous market crash where they close stuff down, just like 2001, where it's closed and that gap's way lower. Can you get in a position? Yes. It's uncontrollable. Yes, but those are few and far between. And even this sell-off, I hate to see people in margin calls, but there are people who've been way over leveraged and not managed their downside risk correctly. And I'd rather have them learn that and never do it again and learn, okay, I need to get some proper education. I need to learn how to properly trade or invest, and especially learn how to properly manage risk, so I'm never in that position again. Oh, yeah, well, yeah, that's the first time I ever saw that. I didn't even put those comments up because they're not even warranted a part in this feed. I have no idea. It's probably spam. It's just like all those crypto stuff I got to report the comments on. I made all this money trading crypto yesterday. Oh, geez. Stop. Margin calls are a bad idea in this market. Margin calls are a bad idea in any market. You don't want to be in forced liquidation mode. All right. With that, thank you, everybody, for attending. Reminder, I will be on 8 a.m. Central Time. Starts the countdown timer for the live stream tomorrow. We will have some information based off European, Asian session, European, and early, pre-market U.S. sessions. So hopefully we can fine-tune our trading, our tactile trading for tomorrow morning. All right, you are welcome, Wavy. I'm running out. My voice is running out. It's been over an hour, and it's still a Sunday, and I got some more work to do, so I will talk to everyone. Please consider leaving some comments to help get this in wider circulation, and I will talk to everyone later. And if you're new here, please do consider subscribing at least, so get notified when we do the live streams, and especially the ones that are unannounced, like midday if we hit crisis mode or something. I'll talk to everyone later. Have a great rest of your weekend. Bye for now.